agree. One of my theses for the collapse on crypto that will take us to maybe as low as 12 on Bitcoin is that
All asset classes have suffered hits after hits, from digital currencies to equities and commodities. However, certain assets have suffered heavier damage than others in recent months. Still, Bitcoin is now up by more than 300% compared to where it was before the pandemic. In comparison, the S&P 500 index has climbed by merely 1%. This just demonstrates Bitcoin's dominance over other assets. In a recent interview, Gareth Soloway talked about Bitcoin and stock markets and what he expects will happen in the coming weeks. Before we look at it, I'd just like to remind you to like this video, subscribe to this channel, and leave a comment below. All of this helps with the algorithm and motivates us to create new videos every day. Now, let's look at his interview.
So the big question is, right, when we talk about bottoms in the market, unfortunately, we're in a period of time where the Federal Reserve is in total control of that. And what I mean by that is that as long as they were printing the massive amounts of money that they were, the markets just went up and up and up. And yeah, you had the COVID collapse on panic right here and everything. But if you go back to 2009, we were kind of stuck in this sideways upward sloping channel as quantitative easing was going on. And remember, quantitative easing started in 2009 with the Great Recession end, and it basically continued all the way through. And then right here, so this was a taper tantrum right here on the chart. So this is where the Fed threatened to raise rates. The market dropped 20%, and then they backed off and they went back to printing money. And then here was where COVID, it made it seem like the world was going to end. I mean, we didn't know what was going to happen, and you had this major decline. From that major decline, they printed more money than they ever have before. In addition, the US government was printing and sending checks out to Americans. Well, what happened? The market became a market on steroids. It went insanely high. You can see how quickly it went above this range. And then what you can see here is fascinating. We've actually come back to that upper range, and notice how the market is bouncing right there. Now, unfortunately, I think this is just a bounce, meaning that maybe we go up another 100 points on the S&P, maybe a little bit more. But if the Fed is truly pulling all the stimulus away and sucking money out of the system by raising rates, it makes a lot of sense that we should start going back into this longer term trend at the very least. So of course, you're going to have support at the high end, but after that bounce, you probably trade back inside that range. And then at that point, we'll have to see where the markets bottom out. Again, a lot will have to do with where, do we see a recession? Then the markets probably go even lower. But if there's no recession, my target on the S&P, or this is the Spiders, which is an ETF that tracks the S&P, would be this former COVID high pivot, right? So this is just before the COVID panic. And then look at how the markets just seem like they want to go back to that level. It's also in the midpoint of this longer term channel. So just some cool ideas and some cool charting for you guys to kind of check out. I love kind of showing people this because a lot of people think technicals are just a bunch of nonsense. And then you look at the charts and you're like, wow, that really did bounce right at that level. And it's just very cool stuff. So I think that the Fed is now has an issue, right? Yeah. In the last 20 years, there was basically no inflation, maybe 2%, 1%. I mean, that's what they were reporting anyways. So they didn't care about printing money anytime the market needed or the economy needed it. The problem is now you have 8.5% inflation, and that is very, very high. So they can't go right back to printing. What I do think will happen, though, is that they're going to continue to raise rates and be aggressive and try to bring inflation down. Later in 2022, early 2023, the likely scenario is the economy is going to start to sputter. It's going to go into recession. And at that point, you're going to see unemployment start to rally. Inflation has probably come down at that point to like 5%. But once you have unemployment that goes to like 6, 7, 8%, and you have that lower read on inflation, the Fed is going to say, okay, well, which one is the worst issue here? Well, 5%, it's not good, but when you have 10% unemployment, we got to attack unemployment. And I think they're going to then capitulate in that terms, and they'll start printing money again. So again, it makes me longer term very bullish on gold, eventually crypto when it bottoms out, these alternatives to the dollar kind of thing. And the great thing about it is that gold's up a couple percentage points for the year, but I did make that call. You're right, in December, and right now I think Bitcoin's down whatever 30% or 20% from the start of the year, and then you have the stock market, the Nasdaq's down, from the 52-week highs that were just in late 2021, like 25%. So again, sometimes it's a weird thing, but sometimes an asset that just kind of holds steady or goes up a little bit is actually can be the best performer and the safest place to be. It's not really the sexiest, right? But at the same time, sometimes preservation of capital is really important. So on gold, you've absolutely seen a breakout, and gold is doing exactly what you would expect it to do. So there's something called a retrace after you break out, where something breaks out and then it has to come back to home base. So you can see right here, you had basically this longer term up move from 2018 to 2020. And then we basically had 2 years of just chop, right? But that's actually a bullish consolidation pattern. And then you can see if you connect this high with this high and this high, you broke out above that. Recently, we went up to what's called a perfect double top, which is the high pivot here. You can see it was right there as well. And then you're coming back to home base, which is what we call the scene of the crime. It's that same trend line. And I always like to use the analogy of, think of it like a kid, right? In the beginning, the child is at home, they're young, they're not going out, they're not doing anything. Then as they get older, they start to think about going to college. So they're kind of, they're saying, Mom and Dad, I want to get out of the house. Why do you make me stay? And why do I have a curfew? Kind of they hammer on it. Eventually they go off to college, they leave the nest. But you know what? That child eventually comes back for Christmas or Thanksgiving. So they come back to Mom and Dad's house right here before they go on their merry way up again. So I think that's what's going on with gold. I think that, again, if you're someone like me that believes that the Fed, yes, they're pulling back on stimulus now, but the first sign of major recession, they'll go back to printing money, which is what they know best. Then gold is a great place to be in these crazy times right now. So one of the levels, this level here is a really big one. This one we just hit. I just added to my gold positions just last Friday as well. There's also this trend line, which you can kind of take note of, which is right there as well. So if you connect these lows here, it gives you that same level. So this is a really 1800 is like a major important level. If that were to get broken, then you start trading down potentially into the high 1600s or the 1700s. But I'm in the camp that I personally don't think that 1800 will get broken. But again, always as a trader, and again, I've been a trader for a long time and made plenty of mistakes in my early years. All the time, you have to look at both sides. You just can't be like, oh, this is going to be a great trade, I'm going to make millions of dollars. You have to say, well, what if it doesn't work out like I think? How do I react? What do I do? And that's a great point to talk about. Well, what if it doesn't work out? Where are your next levels? The markets do that. If you look at double tops, they almost always breach on the second high. And what's going on there is the second high is where euphoria is even greater. So you have more small investors just rushing in. We know we saw that the futures, the futures on Bitcoin ETF launched right there too. So there was just so much hype. But ultimately, one of the keys to note is that you never really stayed above the level for a day or two. And it always came back in. And with all that hype amongst small investors, you have to say, well, why didn't it go higher? Well, the answer very simply was there was big money selling into it, right? So that's the only way they could force it down, is if big money was selling. So we did come back in. I made the call that it's going to go to 20,000. As of now, that's still in place. Although, like you said, there's likely a further downside target, which I can go over in a minute. But one of the things I want to show you guys is this is really cool stuff. It's called parallel channel trading. And what you can see here is that if you connect these lows here, so these recent lows before the breakdown, and connect these highs, you can see how these highs, pivot high, pivot high, pivot high, they all align. And then these lows align as well. And so that was creating what we know as a bear flag. And that told me that we're going to break lower, and we have done that. And what's just so cool here is, let me remove that, is if we do a new channel, and channels, again, this is something that gets a little bit more complex with education, but it's so worth it. Or look at this high, low, like right there, and then back here. So channel trading, you'll find that markets, for some weird reason, they move in these kind of channels where support and resistance, and it might be downsloping or upsloping, like I just showed in the two examples, but it's very cool. So I did end up short-term. This is just a short-term trade, but I did end up going long Bitcoin here for a move back to 33, 35,000 just as a trade before I do think it goes lower. And I know I don't want to keep it too long-winded here, but just to think through the target that I have on Bitcoin. So the major target I have is 20,000. So far, we've gotten as low as 25,000, but 20,000 brings us back to the high from 2007. So that's my high-end target. The way I get my 12,000 target price is by doing what's called a measured move. And the measured move basically is taking this high, which was the 69,000 high. You basically went straight down to 33,000. So you take that distance here, and then you take the highest point on the bounce before the next leg lower and you stretch that out. And what you'll notice is that if the same distance from here to here, this is the same distance to here. And this is something that very commonly happens in charts as well. And it's called a measured move. And that gives me my low end target, which is right around 12,000. I look at mainly the daily chart. For me, as a swing trader now, for day trading, you look at the intraday. I usually go the 10-minute and the 60-minute. But for swing trading, which is holding a stock for days to weeks or months, usually less than a year as a swing trade, I'm going to be focusing on the daily chart and looking for major pivots, gap fills, double tops, double bottoms, bottoming tails, like all these kind of terminology things that you hear. They're all things that put the odds slightly in your favor. And what I found is that when you find a level on a chart where you have more than just one of these factors, let's say you have a bottoming tail and the tail happens to coincide at a gap fill, the odds increase, right? So the idea is that, I mean, just look at the level right here. And I actually did buy this. So I only put 25% of what I wanted to put in, which was about 2% of my portfolio. So in other words, I was willing to go up to 8%. But look at this high pivot over here before the COVID collapse. And then look at the run. And then we went right back there. And what's it done? It's bounced beautifully. Now, on that same kind of thought process, let's talk about, well, where was I going to add to the position? Because I only did 25% of what I was willing. Well, just below that, you have this beautiful gap fill. See this gap right here and this pivot high right here? So this is where I would have added more to the position if I needed to. And again, you have multiple pivots right in this area where you can add to that position if fear and panic drive things. One of my theses for the collapse on crypto that will take us to maybe as low as 12 on Bitcoin is that it's so eerily similar to the beginning of my trading career with the dot-coms, where, I mean, you had dot-coms that were run out of their parents' basement. They literally made almost nothing. It just had like .com on the name. And therefore it got this crazy, like 50 million valuation or some crazy valuation. And it just wasn't healthy. Right. And you have meme coin SHIB now, and you have, Doge. And then there's literally like 19,000 cryptos out there. That's not healthy for the system. It's overpopulation. You need to kind of clear that out. So I 100% agree. I'm in the same camp where I'm not a buyer for a long-term investment in Bitcoin, even though I'm super longer-term bullish. I think it's going to 500,000 eventually. But in the near term, I'm only a swing trader, meaning I'll buy support, sell resistance, but I can't be a long-term holder until I see this wash out.